Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. On this episode, I'm excited to welcome Edward Dowd to the program, a former portfolio manager at BlackRock, where he managed a $144 billion growth equity portfolio for a decade. He is also an author and a founding partner of Finance Technologies. We're going to dive into his view that the broad market continues to be in an unsustainable bubble. What could finally make it burst, and how can investors avoid the carnage? We're going to talk about the US dollar, showing weakness so far this year. How much farther could it fall, and what would the implications be for the global economy? We're going to break down the German police arresting citizens for social media posts. Is Germany totally cooked? And the escalating tensions in the Middle East, and how it could affect oil prices, and so much more. Before we dive in, Commodity Culture has merch. Get your hat, t-shirt, hoodie, or mug today, backed by a 100% quality guarantee, using the link in the description below. And now, my friends, strap yourselves in for my conversation with Edward Dowd. Edward Dowd, great to have you back on Commodity Culture. I want to start with your current assessment of the broad market. We saw it correct fairly meaningfully in the initial aftermath of the Trump tariff announcement, but we've now staged a recovery with the NASDAQ hitting new all-time highs. I believe the S&P recently hit new all-time highs. Trump even announcing close to the lows that right now would be a good time to buy, and he was right. What do you make of this price action in the broad market, and how do you think things could play out from here?
Yeah, so when that sell-off occurred, I was on Bannon's War Room near the bottom, and I suggested to people, even though I'm bearish, this is an exogenous event, meaning Trump imposed it, and he can fix it. He imposed crazy tariffs, it scared the markets, and then he took them away. To classic Trump negotiations. And I've said over the last several weeks, the markets could go to new all-time highs, but eventually we're going to roll over at some point. And you got to look at the valuations. The valuations in January, we put a report out. The valuations are near all-time historic highs, and 10-year forward returns, if you purchase an index right now, it's not going to be pretty. And now we're back to those extreme levels again, even a little higher. So we're expecting the stock market to eventually figure this out. The bond market is already responding. The 30-year bond put in a nice monthly swing low on price and a nice monthly swing high on yields. The 10-year is back down at almost to where we were before we started the tariff scare. So we think interest rates are going to be coming lower as the economic data, the hard data, starts coming in weaker. And it's going to be driven primarily by housing in the U.S., which is a big part of the economy. It's 20% of the consumer. It's 20% of the economy, 25% of the consumption economy, which is 70% of GDP, and that's all going the wrong way. And we're not gloom and doom. We're not calling for a systemic problem, but it'll be a deep recession. There'll be a risk-off trade, and the Fed will chase it all the way down, we believe.
And you have spoken last time you were on the show that you believe we're in a bubble. There are so many signs that you mentioned pointing to that fact. You know, the Buffett indicator is also signaling the market is significantly overvalued, but there's so much more than that pointing to that fact. Do you think this bubble could be extended farther out in the future than would otherwise be possible due to all of the passive inflows in these massive ETFs that are coming into the broad market and pushing up these big names?
Yeah, look, there's two things. There's fundamentals and there's technicals. My partner and I focus on the fundamentals, and the technicals eventually follow. The technicals on the NASDAQ looks like it's called a broadening pattern formation. So the NASDAQ could, over the summer, which is the next 6 to 8 weeks, go up another 10% and drag the indices up another 5%. But come the fall, as the hard data emerges and the valuations, people realize their own. And by the way, this indice rally is driven by very large cap stocks. The average stock isn't doing well. If you look at the transports, they're not near all-time highs. Home builders, not near all-time highs. So there's a lot of what we call warning signs, and this is I think about the market gains, the market concentration, 38. I think 10 stocks are 38% of the value of the indices of the S&P. So this is a classic. We saw this in '07. I was a portfolio manager then. The subprime bubble had already started bursting in February of '07. There were some bank failures, but the markets went to new all-time highs, driven largely by 6 or 7 stocks into November of '07. So this is the final phases, and we don't get too hung up on trying to capture the last 10% because it's an escalator up, elevator down, and we suspect when everybody realizes they're on the wrong side of the trade, and they are, because asset allocators are overweight equities, underweight bonds. It's been the worst bond bear market in 40 years. There's going to be a realignment of assets.
And now a quick break to hear from our sponsor, ARK Silver Gold Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1-ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307-264-9441 or by email at ian@arksgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. Talk to us about how the debt market plays a role in all of this. I was talking to Matthew Peipenberg recently, and he said that he thinks it's going to be a debt crisis that is going to pop the bubble in the broad market. Talk to us about what you're watching when it comes to the fixed income space. The spreads between corporate bonds, high yield, and government bonds is fairly small at this point. Is that something that you look at as an indicator? And what are the issues within the debt market that could leak into the broad market and cause further issues there?
Yeah, we've done work on the credit spreads. They're tight. They're super tight. And we've done the correlations, and they got nowhere to go but up. So there's going to be a mean reversion. Credit issues are being hidden at the moment. The banks are extending and pretending in commercial real estate. Then you're going to have housing weakening. You're going to have some credit hiccups coming. The Fed is not going to bail out the banks this time like they did on the duration risks that happened in 2023 with Silicon Valley Bank. That's when they extended loans to cover the held-to-maturity losses on the banks to prevent deposit outflow. What they're not going to do is extend loans to prevent bad credit, which is coming. People don't remember this, but the Federal Reserve kind of took over the credit markets in COVID. They started buying corporate bonds for the first time in the history of their charter. So they've been artificially keeping rates tight. So it's kind of a fake market. And I think when this does bust, it's going to happen fast, and it's going to take people by surprise. We also know the economy's been a lot weaker than stated. Under the Biden administration, it's become pretty well known amongst economists that about 1 million payroll jobs were either fraudulently made up or statistical incompetence. Doesn't matter. There were about 1 million jobs, and the Trump administration, the BLS is still running the same game. They put out a good payroll number on the month. We'll get one this Friday, but then they revised the prior months down. It's the same game under the Biden administration. So the economy is weaker than people suspect. 68% of all Americans are living paycheck to paycheck, and they're using buy now, pay later loans, which is that happened during the Great Depression. It was called consumer installment credit. It's now people are taking out loans to buy basic necessities. Not a good sign. So, and then globally, we also have a real estate problem. China has a real estate problem. Europe does too. Real home prices are declining. That'll eventually will turn into nominal prices declining. So there's a lot of economic activity that's going to stop soon. Construction projects are starting to wind down. Although we're going to put out a report next week looking at a bunch of housing indicators. We've already put out 2 real estate reports. Everything's rolling. And the question is how fast. And housing recession is a slow rolling thing. It started, housing really, the leading indicators peaked in '07 and started rolling over, and then it became apparent to the masses in '08. Same thing's happening now. A lot of our leading indicators peaked in '22. What kept it afloat was the illegal aliens and the fact that this cycle was driven by multifamily housing, which is units of 5 or more, and that has a longer construction time frame. Single-family homes take 6 months; these take over a year. So that's kind of, as you're building, that's economic activity. But construction projects are going to start rolling over because inventory is building. The marginal buyer isn't there. The non-illegal immigrant can't afford the mortgage, so that's a problem. So there's no new. Most buyers, you need mortgages, conventional loans. They can't afford the monthly payments. That's why home sales have stalled. And then as we deport people or they self-deport themselves, that was kind of the floor to the housing market. That's all going away. So nominal prices should start to adjust over the next 6 months, and then there'll be, we think, a slowdown in economic activity. And we do believe inflation's coming down because shelter is 36% of CPI. New tenant rents are already declining. That should feed into all tenant rents, which is a big part of the calculation for CPI. And as the housing sector contracts, inflation will come down some more because housing in total, not just the shelter component, is 45% of CPI. So the Fed also is not your friend right here. They're keeping real interest rates are 2%. And the solution to real interest rates, the solution to high real interest rates is high real interest rates themselves. They choke off economic activity. And we're going to see that rolling out throughout the year.
Well, I want to get to the people living paycheck to paycheck and dive a little deeper into real estate in a moment. But first, I want to get your thoughts on the US dollar showing fairly meaningful weakness so far this year with the DXY down around 11% year to date. What do you think the reasons are for this decline? And do you think we will continue to see weakness in the dollar up ahead?
Well, the Trump administration is a weak dollar administration. They're jawboning it down. Now, technically, I follow cycles. There's long cycles on these asset classes. And my friend Tim Wood is a technical analyst. And last year, he was saying that the 4-year cycle low in the dollar is probably going to come in the first or second quarter of 2025. And here we are. Now, for the dollar to remain in a bull market, by the way, folks, the dollar's been in a bull market since the great financial crisis. It's been up and to the right if you look at the long-term chart. For the dollar bull market to continue, we need to put in a low higher than 89.10, which was the last 4-year cycle low, I think in 21. So, or 22, I can't remember the exact time, but 89.10 is the number. If we go below that, something's changed. There'll be a big giant rally in the dollar, but then we're in a long-term bearish trend. But we're looking for a low in the dollar. The dollar's currently around 96, 97. So it's got a long way to go before it hits 89.10. If we put in a good, meaningful technical low, and for me, that's what we call a monthly swing low, where the bar on the left is higher than the middle bar, and the bar on the right is higher than that middle bar, and that's a good technical indicator. So we won't know the dollar's bottom for a while, but it's in the timing band to bottom. So this is a very precarious time for the U.S. dollar. But technically, I'm looking at the space between 96.97 and 89.10, and I think the dollar is overstretched. There's a lot of bears on the dollar, and I think it'll reverse eventually. But we'll see. This could be the change in the dollar bull market. We have to wait to see what happens. But if I'm a betting man, I think we bottom in the next two months.
And are you watching or paying attention to gold reserves versus US dollar denominated debt reserves? There's a lot of talk out there. A lot of guests on this show talk about the fact that gold, the percentage of gold holdings in relation to US government debt is starting to increase. Do you think that could put negative pressure downwards on the dollar? And what are your thoughts overall on that scenario?
That's already occurred because what's going on is gold has become money again. A lot of people don't know this, but Basel III instituted a little unknown fact that gold is now tier 1 capital at banks, physical gold, not paper gold, which is the ETF like GLD or gold futures. So if a bank holds physical gold, they can create money from that tier one asset. You can loan you can loan against, and so it's been uncommoditized. It's now money again, and a lot of that. And in the U.S., this goes into effect this month, July. I think there's a lot of buying ahead of that. So this has already occurred. So I think banks have already been preparing for this, and I think gold, long-term gold, I think is something you want to have as a long-term investment. Physical gold, stay away from the paper. It'll go up, it'll go down, but I think the trend is up and to the right over time. One of my friends is a great technical analyst, thinks gold's going to be 10,000 by 2030.
Very interesting. I want to talk about the living hand-to-mouth statistic you brought up. And there has been a survey recently by Payments Intelligence indicating, as you mentioned, around 68% of Americans are living paycheck to paycheck. I'm assuming that's similar in a lot of countries around the world. My home country of Canada, where the cost of living is completely skyrocketed past wages. The UK, I think, in much of a similar situation. I'm wondering if there is a connection between that and embracing far left socialism and communism, because all of these people have no prospects of saving, owning real assets. They have no chips on the table. So is the tendency to then ask the government to redistribute the chips from the people who they see as collected too much? And could that be what is behind, this radical socialist Zoran Mamdani looking like he could be the next mayor of New York?
Well, so a lot of the response to what's been going on since the great financial crisis has been populism, national populism. So there's two twin opposing forces: communism, socialism, and national populism. Trump won. Trump got elected because the real economy was in the tank for the middle class. It was the economy was floated by the very rich and the illegals that were coming in, and everybody else in between was getting squeezed. One of the solutions, obviously, is communism. We all know that doesn't work. This guy in New York is talking about seizing property, and I mean it's insanity, and that does not. Communism creates shortages. That's what we know. You look at the Soviet Union. There were long lines for basic necessities, and the people at the top who were, supposedly for the people had special stores they could go to, and they were the ones taking, they were the new oligarchs. You can either have an oligarch or a government oligarch. It's one or the other.
And what do you think the implications would be for New York should this gentleman get elected, Mamdani, and end up starting to implement these policies? Are some of the things he's talking about technically unconstitutional? Could we see interference from the federal government? And do you think that sort of experiment is maybe necessary to show people what can actually occur if you start to implement these policies?
I'd hate to see them implemented. They would definitely destroy a lot of wealth in New York immediately. The real estate markets would collapse. Money would flee. People would flee. Rich individuals would leave New York, go to Florida. The very rich can transport themselves overnight, and that's what would happen. It would be a giant sucking sound of tax revenue out of New York. Real estate values would collapse. It'd be a disaster.
Yeah, and he's talking about even having social workers in place of police going to intervene in crimes. What's he going to do? Talk them through it? I don't know how that's supposed to work.
I saw something which whether this is true or not, but it was a stat that 40% of all NYPD would resign if he's elected mayor.
That makes sense.
So crime. So you're going to have poverty and crime. Sounds like a good deal.
Yeah, and Ron DeSantis saying he would have to set up a processing facility for all the NDP members that would be trying to work in Florida. Speaking of radical political ideology, I want to touch here on German police raiding the homes of 170 citizens for supposedly spreading hate or, and this is completely insane, insulting politicians online. Now, in my mind, once such an action is allowed and tolerated by the population, it's got to be game over. How else do you get out of such a situation than collapse of the government? And of course, it looks like they're going to bend the laws however they can to stop the main opposition, the AfD, from ever getting into power. The EU's already stated that they're willing to step up and interfere if need be, like they did in Romania. What are your thoughts on what's happening in Germany here in this kind of expansion of the censorship state?
Yeah, I put out a very cheeky X post on this last week. And basically, I said, how long does it take a country to forget that they fought World War II to extinguish fascism? And then I said, for Germany, apparently it's 3 years. And I quote tweeted the arrests of these people who were making, just their opinions known on the internet. So, Germany, the Germans have already forgotten their history. I don't know what's wrong there. If you start to, it's over. I mean, I agree. Once you quash free speech, it's a slippery slope. I mean, Goebbels was named as the minister of propaganda in Germany. They called it the Ministry of Propaganda. I mean, you can't. Well, that was right in your face. So it looks like Germany is trying to tell you how to think at the moment, which they did, in the 30s before World War II and before the extinguishing a lot of, Jews, Christians, Gypsies, you name it. They had their own ideas of how the German populace should look, which we call eugenics.
And what do you make of this push for militarization in Germany and in other parts of the EU, in the UK as well, calling for mobilization? We need to get more troops. I think some of the German politicians were even saying, well, hopefully enough Germans will join the military, but if not, we're going to have to think about mandatory conscription again. UK echoing similar sentiments. I believe Poland as well, considering military conscription, all because of the supposed existential threat of Russia. They have this idea in their head that Putin is going to not stop at Ukraine. He's going to continue onwards and try to conquer Europe, which seems pretty ridiculous. What are your thoughts there? And they're going to need all this funding to do it. So what are their chances of success in even undertaking something like that?
I take a more simplistic viewpoint of why this is occurring. It's due to the demographic makeup of Europe, and it's an aging population with unfunded liabilities and pensions, and they needed a distraction because the younger generations are going to be impoverished by this collapse. So what do when you're running out of money? You go to war.
Yeah, I was just going to say
this is historical. We got the banking system creates every 3 or 4 generations a war cycle.
And is this also what's behind Trump getting involved in Iran as well, do you think? Sending a plane over there, supposedly destroying nuclear facilities, supposedly not, according to many other people. Is that show of force a way to distract the American population from economic issues at home?
Well, it's hard to know what's going on because we're in the fog of war and there's a lot of propaganda. But let's give Trump the benefit of the doubt for now because he declared the 12-day war is over. He wants to get back to the domestic agenda for now. But clearly there were forces out there trying to get this going. And I think war is a good distraction for financial collapse or a reason to point to for financial collapse. So, I think he wants to focus on the domestic agenda, but other powers and entities have different ideas.
Absolutely. And just one to pull on that thread a little bit more, Trump did run on kind of being anti-deep state, America first. What do you make of his term so far in terms of those promises? Because he seems to be heavily influenced to some degree by Israel and carrying out their bidding on some level. Maybe I'm totally off there, but it just feels like he's been working hand in hand with Netanyahu on a lot of issues. How do you feel about Trump's term so far? And has he been able to deliver it all on? Obviously, he's done some good things. Some things seem questionable. Some of his policies all over the place. What are your overall thoughts?
Well, it's in my humble opinion, it's a mixed bag. I kind of knew that. When you go into a bureaucratic administration that's populated with these ticks known as the deep state, they're not going to be easily removed, and these institutions have their own agendas that supersede presidents. They run game plans and they don't care who's in charge. So he's dealing with that. I would say, since I'm focused on economics recently, and that's what my firm does, he promised to cut the deficit and rejigger the private economy. The deficit is going to grow under this big, beautiful bill. We raised the debt ceiling by $5 trillion. He is doing a good job on immigration, which needs to be done. But this big, beautiful bill is not exactly what he talked about, and the Doge cuts never materialized. So that's not, in my humble opinion, he's accelerating the rate of growth in federal debt, but he doesn't understand he's not accelerating it enough because Biden and them and Team Biden and shadow government really accelerated the growth in debt in the last 2 years of that administration to fund illegal immigration. And the system needs constant growth and accelerating growth. And so there's growth, but it's not enough, and we're going to roll over economically.
And what do you make of Doge's efforts? Obviously, they were able to find some wasteful government spending. Elon Musk now obviously very much at odds with Donald Trump and talking about forming a new political party. I'm not sure that that's going to happen. What do you make of their efforts? It harkens kind of back to the Grace Commission under Reagan, where there was a lot of talk about a new morning in America and they were going to make all these big changes, but ultimately they couldn't get a lot of the desired changes passed through Congress. I think we've been in a similar situation here, and now we're seeing this big, beautiful bill, which Elon is calling kind of a slap in the face to the American people.
Yeah, look, Doge surprised me initially because they got in there so quickly. I didn't think they'd get in there. They discovered a lot of fraud. They exposed the NGO problem. But for some reason, Elon was never allowed to go over to the Pentagon. And so we don't know what's going on over there, which is a big, our deficit is interest and the Pentagon, those two things, basically. And then we have the unfunded liabilities and Medicare. So that seemed to get stymied for some reason. So Elon and Trump had a big falling out. I just don't pay attention to the noise because they're both big egos, and for me, I'm focused on what the actual results are. So what we do know is there's a lot of fraud in the government, but I think a lot of the fraud lies in the Pentagon, and we weren't able to take a look at that. So that's disappointing to me.
I want to talk about the tension, the escalating tension in the Middle East and its potential impact on WTI crude prices. We did see an oil price strike when Israel began attacking Iran. People thought it was going to go much higher. They were talking triple-digit oil. There was all this threat of potentially closing the Strait of Hormuz or potentially destroying Iran's oil production capacities. You said in a recent interview on USA Watchdog, quote, "Oil has collapsed and the oil markets are telling you the Iranians are not going to close the Strait of Hormuz. So for now, the economies of the world are not going to be experiencing an oil price shock." How are you currently viewing the oil market, and are there any scenarios you could see where we could get back into oil price shock territory?
Yeah, so during the whole fog of war, the 12-day war, I kept my mouth shut because, look, during the war, everybody's going to propagandize. The Israelis were saying nonsense. The Iranians were saying nonsense. And Trump administration was saying nonsense. And I said, the only thing I'm looking at is the price of oil. It spiked a little bit. But if you looked at it technically, it basically had gone up to there was a declining channel trading range in oil. And it went up to the top of the channel, broke through slightly. And I said, unless it breaks above 80, this is not going to be a big deal. It never broke above 80. It's now back down in the 60s. And so I didn't react. I didn't get freaked out. I watched oil to tell me the truth because, again, everybody lies in war. And right now, my assessment is there's no oil price shock in the future, but that could change overnight. Because we're here now that the fog of war is lifting a little bit, we're hearing things like maybe they didn't get the enrichment centers. And so we don't know what's really going on. What we do know is the candle's been lit, the fuse has been lit. And for now, there seems to be a de-escalation, but it could flare up at any moment. Again, if oil breaks out meaningfully above 80, and we're on our way to 150 oil. And I want to remind people, during the great financial crisis, we had a housing crisis and an oil price shock. It really wasn't talked about, but oil went from 90 to 147 in 6 months during 2008. So if we get a scenario like that, the chances of a systemic problem rise exponentially. So right now, we're not calling for a systemic banking crisis with this housing downturn. We think it can be managed. It'll be painful, and stocks will go down, and there'll be a risk-off trade. But if you get an oil price shock coupled with a housing problem, we got issues.
And taking the oil price shock scenario out of the picture, are you bullish on oil here? Because a lot of people are pointing to several issues with oil on the supply side, the rollover of the Permian Basin, a lot of those fields no longer producing what they used to. The incentive price for extracting oil for a lot of these companies is rising. The speculation that Saudi Arabia doesn't have all the oil reserves it states. There's a lot of bullish indicators you could point to, and then people on the other side point to, well, if there's going to be a recession, oil demand's going to drop, you crush demand, the supply side no longer matters as much. What are your thoughts there?
Yeah, so we're predicting a mild to severe recession, and if we get that, we think oil could touch 30, stay there for a couple months, and then rebound, as it always does when the Fed will come in to do QE. There'll be a fiscal response. Again, we're getting ahead of ourselves, but we think oil is on its way to 30 at some point.
Wow. Interesting. So I want to switch to real estate again for a moment here, because as you mentioned, Finance Technologies released a report recently titled The Multifamily Housing Debacle. In it, you discuss why you're seeing early signs of a brewing housing crisis in America. You gave us a bit of a hint of that earlier. Could you break it down for us and its potential implications for the U.S. economy?
Yeah, so basically, every housing cycle is different. In the great financial crisis, it was single-family homes. So single-family homes will get hit in this downturn, but it will also drive the recovery on the other side, because there'll be affordability. The millennials are still in their demographic sweet spot. They'll be able to enter the market. So the good news is single-family homes will drive the recovery on the other side of this. Multifamily housing, we haven't seen this level of construction since the 70s, when the baby boomers were starting their journey in their demographic aging, where they rented apartments first before they started buying homes. So we just saw a multifamily bubble, and that's already starting to burst. And that was supported by the illegal immigrants who were given shelter. That's all going the wrong way. When you inject 20 million people into an economy with government stimulus, and then you take that away, the floor is removed.
And we talked about the gold sector a little bit. You said you think gold is a metal that you want to hold moving forward. Do you have any thoughts on the silver market here? Because silver is a metal that is constantly called extraordinarily undervalued, very far off of its all-time highs. The gold-silver ratio is outstretched. You've heard all of the euphemisms out there from the silver bugs. What's your thoughts on the silver market here?
Well, silver is, it's more speculative. So for people with more risk tolerance, looking at these ratios, the idea is, well, that ratio will close, so silver is going to have a big move, correct? That's kind of the thesis. That's all well and good, but silver is not tier one capital. And I'll stick with the safe trade. Buy what the banks are buying and continue to buy. And when we do have an eventual Bretton Woods 4 or whatever the hell we're going to get when we have a monetary reset, which I don't know whether it's next year or 10 years from now. Gold will be a big part of that. So gold is your bet on a new monetary system, because it'll be part of whatever it is.
And what if you had to kind of speculate, what do you think the architecture of a Bretton Woods 4 would be? How could such a system be implemented? Obviously, gold would be involved. Do you see this more as, nations trading back and forth using some kind of gold-backed currency? Do you see actual gold-backed currencies being introduced into societies, fully redeemable for gold? Obviously, these are all complete unknowables. But if you were to imagine a financial reset, a monetary reset, how would you see it?
Well, the problem is there's we're known as the American Empire. Our dollar is ultimately backed by our nuclear weapons and our navies and our ability to keep the trade routes open. So as long as we continue to keep the trade routes open, and we're looked to as the kind of the enforcer of that, the dollar will become a part of it in some form or fashion. But that's where the battle is going to be fought. This is world dominance for the next monetary control system. So this is why ultimately you have to worry about war. War will be caused by those who seek to become the next world reserve currency or whatever that looks like. So it's really unknowable, but gold is your best bet in this storm. Long term, I mean, gold, if we have like a risk-off trade where there's a margin call, gold could pull back quite a bit because people sell what they can, not what they want to. But I wouldn't worry about it. I wouldn't trade gold. I would look at, gold is just part of your portfolio, have some physical available, and just keep it there.
Awesome. Well, Edward, this has been a great conversation. We're going to jump over to Rumble for another shorter update. You are the author of a book, Cause Unknown, The Epidemic of Sudden Deaths in 2021 and 2022. We're going to dive into some of those topics, a little too spicy for YouTube. But for now, tell us about Finance Technologies, where people can find that, and anywhere else you'd like to direct people online.
Yeah, so financetechnologies.com, spelled with a PH instead of an F. We have a product page where you can buy these reports. Some are expensive, some are less expensive. But if you're interested in protecting your wealth and navigating the coming storm, we suggest you buy some of these reports. We're also available for consulting for a fee. So check us out there. We also have a bunch of other information available for free resources economically, and also all our work we did on the COVID-19 situation in terms of the magic juice that was produced and what happened there. So we have a lot of good stuff. Check us out. I'm also on X at Edward Dowd, and I'm on Getter on X at Dowd Edward and Getter at Edward Dowd.
Great. I'll put all of that in the description below. Let's hop over to Rumble. Let's discuss the magic juice. I'll see you guys there.
Thanks, Jesse. Good to be here again.
Thank you for joining us today. This episode is brought to you by ARK, Silver, Gold, Osmium. Take advantage of their specials right now. Silver Kangaroos, 2023 1-ounce coins, $2.47 over spot. Silver Maple Leafs, 2025 1-ounce coins, only $2.87 over spot. While supplies last, reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arksgo.com, and make sure to tell him that Commodity Culture sent you. And of course, pick up some merch. The link is in the description below. Hats, t-shirts, hoodies, mugs, a 100% quality guarantee. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.